Hey, what's up, guys? Node Investor here. Happy Friday, everyone. Maybe Saturday for some of you. And for those of you that are watching the recording, not the live stream, thanks for watching. Thanks for being here. As always, we're going to be doing a little bit different of a live stream today. I will make time to look at the charts, absolutely. But for the first part of this session, maybe the first 30 minutes or so, we'll see how it goes with the Q&A. I'm going to focus a little bit more on educational. So this is a little bit more of a webinar, and it's centered around trading, of course, but more specifically, a very important topic to trading, and that's the area of risk management. Now, risk management is a pretty broad topic in it of itself, right? The whole notion of stop losses and risk reward ratios and position sizing and drawdowns and all that good stuff. But within that broader risk management category, I want to talk about just position sizing and total risk exposure and all that, because in my opinion, just from what I've seen from just working with newer traders and from some of the discussions I've had with others and in the Slack group and all that stuff, position sizing can be a little bit confusing at times in terms of how much do I put into any single trade? Do I go all in, all out every time? Do I scale in? Where do I max out at? All that good stuff. And it could certainly be a little bit confusing. So I'm going to focus on that topic specifically to help, kind of clarify that, because in my experience, risk management, and more particularly position size and risk management, is really what makes the difference between long-term survival and consistency for traders. And that's because one asset or one coin or whatever you're trading may be much more volatile than another one. And so you got to use different stop loss levels, different stop loss percentages. And that means you can't use the same trading size every time. And if you're using leverage, it gets even more complicated, right? So I want to kind of help discuss that a little bit. So this is going to be a little bit educational. Take some notes, and by all means, let's ask some questions. I'm going to do my best to kind of breeze through it quickly, so not to draw it out a little bit. For those of you that do have access to this, it's going to be a little bit of a summary version of this position sizing video that's part of the 4-step cryptocurrency course. I will cover a little bit of stuff that's in the other ones, stop loss orders and risk reward ratios and all that, but I'm going to be mostly focusing on this. So we'll go through some of the slides from that. Obviously, if you're a subscriber to the nodeinsiders.com alert system, you'll get access to those videos. If you want to buy them separately, nodeinvestor.com training is where you can get access to that. And so hopefully some of you guys have taken that already, and you'll have some questions around this stuff. And so we'll get to that, and then we'll look at the charts. So yes, smash that like button. Let's let others know about this live stream here. It is Friday, going to take it a little bit more easy. We will look at the charts. Don't worry. There's some good stuff happening out there, even though Bitcoin's a little flaky right now. We'll certainly take a look at that stuff. So, all right, let's take a look at this chart here. So I want to tee it off with this, right? Obviously, hindsight's 2020. We see the rally all the way up here, but let's say you were right here at this point, right? And I'm not going to go into the nuances of any specific strategy or anything like that. There's a million ways to do this, but let's say you were watching a breakout about to take place right here around that $9,400 level. And let's say, for example's sake, you have an account that is worth $10,000. Now, when I say account, I'm specifically talking trading account. I'm not talking about your long-term bags. I'm not talking about stuff that you keep on a Trezor or anything like that. I'm talking about trading account. You're in, you're out, you take some scalps, you do swing trades, something like that, right? I'm not talking about something you're going to buy and hold for 6 months to a year. Okay. So if you're in a trading account, you're watching this setup and you're thinking, this guy's about to break out. One of my strategies is to take this on the breakout. This is the question that I want to pose to kind of tee off this discussion, right? You have this chart, you're watching it for a couple of days. Once you have the signal to go in to buy, and your account is worth, let's say, $10,000, right? Then how much of that $10,000 are you going to buy? Now, obviously, you're all going to say, all in. Bitcoin's going to go to 14,000 all in. But if you didn't know that, right? If you didn't know that, and there was the possibility of hey, this is going to break out and then wick me in and then just stop me out, right? That's always a possibility in trading. How much of your $10,000 would you put in that one trade? And that's really the idea here that I want to hammer home, because this is a confusing discussion, right? And it gets even more confusing when you're trading crypto, because it's not like you're necessarily going into Bitcoin and out back to cash. Sometimes you're buying Bitcoin and then you're trading alts via the Bitcoin pair and then back into cash. So it can certainly get a little convoluted, but let's just, for simplicity's sake, this is a $10,000 account. You're only trading cash. You're going in and out of USD. You're not trading alts. It's just purely Bitcoin. Then that's the question, right? And so I'm going to get into position sizing, but what I want to just kind of hint a little bit, let's say I'm going off of a ascending triangle base, very simple setup there. I'm going to buy the breakouts. The first thing you always want to do before you can decide where your position, how much of your $10,000 you're going to put in, before you can answer that question, you have to know where you will be wrong if the trade doesn't work out, i.e., where's your stop loss, right? Where are you going to get out if you decide, oh, you know what, that was wrong? And there's a couple of ways to do it. You can use the moving average. You can use the swing low of this price. You can use the bottom of the ascending triangle base. You can use the 50-period moving average. There's a lot of different ways. You can use an ATR-based strategy where you say, I'm going to give it 1.5 ATR below my entry point, and if it gets below that, I'm out, right? So the stop loss level could be a number of different ways, but you have to have a methodology and a place to put your stop. For me, it would be the lower trend line. So let's say I bought this, and let's say I got in just above the breakout point. If I was wrong, I would say get out at the lower trend line, right? That's me. So using that, I would say, okay, and this is the risk management tool in TradingView. If you're not familiar, I use it like every single day just because it helps you very quickly identify risk-reward ratio, and it tells you how wide your stop is, and you can, of course, play with that here. So let's say I decide that's my stop. So I'm going to get in at 9,400 and change, and if I'm wrong, I'm going to get out at basically, let's call it 9,200. Well, that translates into a 2.6% stop. Or if you're looking at the dollar values, that translates into about $245 of stop loss value per BTC. So back to the question, how much of my 10K do I put into that trade? And this is where your trading plan, your personal methodology, your personal risk tolerance really comes into play. You have to have a maximum amount that you're willing to risk per trade. So if I get stopped out, let's say my $10,000 account, I'm only willing to risk 1% of that, right? Then that's $100. I'm willing to risk 0.5% of that, right? $50. I'm willing to risk 5% of that, $500. What is your number? And whatever that number is, then you can back into this position size and say, okay, if I get stopped out, then I know how much I need to put in here. And that could be 100% of the account if you're stop loss is tight enough, right? It certainly could be. So I'm going to leave you with that thought there as we jump into some of the slides here. So there's a couple of main topics, main takeaways that I want to discuss within this webinar here today. Position sizing obviously is what the topic is here, but risk management really is about long-term survival, right? And one thing I see with newer traders is more often than not, newer traders just trade way too big. Their position size, generally speaking, is way too big, and they're taking on too much risk. And the reason that's a problem, especially for a newer trader, is you may not have as high of a win percent just yet, or you may not have a high risk reward multiple that you're trading against. So for every win, you're up $3. For every loss, you're down $1. That sort of thing. And so what tends to happen is if you have multiple stop outs in a row, suddenly your account is taking a pretty big hit because your position size is too big. So kind of rule number one, if you're new to trading or relatively newer, or you're not really consistent yet, what I would really recommend is dropping your position size. So whatever it is you're normally trading with, whatever it is you're risking per trade, make it smaller. That's kind of my rule of thumb. And so for me, I risk between 1% and 2% on any given trade. Now that's swing trading. for crypto, and how much you risk per trade is going to really depend on how often you trade. If you only take 1 or 2 trades a month, you're taking longer swings, then you can afford to give it a wider stop and risk a little bit more per position. If you're trading several times a week, you probably don't want to give it that much room. You want to play it a little bit tighter, and so you're taking smaller positions, but you're taking more shots. For example, I also trade the stock market in the mornings, and my rule of thumb generally is I will risk about 0.5% of my total account value per day. So that's not per trade, that's per day. So if I take 5 trades in a day, and let's say I get stopped out on all of them, it can't add up to more than 5%. That works for me because I'm using leverage when I'm trading my stock market. So, right, I'm not risking 2% on the stock account. In fact, that's generally my target. If I'm up 1 or 2% per day on my account, I'm done. I'll take the money and run. So it's just going to depend, but you have to have a rule of thumb, right? How much are you willing to risk per trade? And that's a percentage of your account, generally speaking. It could also be, you know, how much am I willing to risk dollar wise, right? Am I willing to risk $100 per trade, $50 per trade, $1,000 per trade? It's just going to be a personal decision. But one thing you got to understand is your risk per trade, this is where it gets a little tricky. Risk per trade does not equal stop loss percentage, right? So if I'm risking, you know, 1% of my total account, that doesn't mean my stop loss is 1%, right? That means whatever my stop loss times my position size equals should add up to no more than 1% of my account. So I hope that makes sense, right? And risk per trade is not position size. So if I'm saying I'm risking 1% of my account, that doesn't mean I'm only going to buy 1% of my account's worth of value, right? So if my account is $10,000 and I'm risking 1%, i.e. $100, that doesn't mean I'm only going to buy $100 worth of Bitcoin, right? That means if I'm wrong, however wide my stop is, if I'm wrong, the most I can lose is $100. So I hope that makes sense. And that's a very important topic to understand here once we start looking at the actual management. So here's another way to look at it, a little bit confusing here, but this on the right here is just kind of your equity use. So if I had a whole account, $1,000, and I had 3 positions, on the left here is if I get stopped out of each trade, notice I will lose the same amount on every trade, but how much I actually put in each trade is going to vary depending on the volatility, how wide my stop is, all that stuff. And so generally speaking, a tighter stop means I can put a whole lot more into a trade. A wider stop means I got to put a lot less into a trade to account for that wider stop, bigger volatility, downside risk, that sort of thing. And so let's see here. I'm going to kind of skip ahead, go through some of these other charts here real quick. There's a formula there that you can use to calculate it, but here's basically the takeaway. Position size is relative to stop loss. So the bigger the stop loss, the smaller the position, and vice versa. So let's go back to the chart. So let's say this was my setup right here, right? 2.6% is my stop loss percent, right? So if I get stopped out here at the blue line, that equates to 2.6% of a stop loss, right? If I decided, hey, I'm going to give it down to here, then that's 5% stop loss, right? So it's just going to really depend. If I went with 2.6%, then you do the math and you kind of back into this, right? And so what you want to say is, okay, 2.6%, and I'm only willing to risk 1%. You do the math, you do the division, and you find out that I can't put in my whole $10,000 into this trade, because if I do, I'm going to lose 2.6%. I'm going to lose more than my 1% stop loss rule. So then I'm going to put in, you know, $4,000 into this trade. But on the upside, right, if it works, obviously you're going to be capped on how much you can make, right? So if your whole account goes up 8%, that's good, but it's not going to go up that much if you only put 4,000, right? So that's the trade-off. Now, that's helpful because there's times where the setup is just very tight, where I can go with a 2 or 3% stop. But if you do an altcoin, you can't generally do that because just the normal volatility, the normal range is just way too wide for that. So you have to take a smaller position, but you go with a wider stop, right? So let's look at something like a theta, for example. Let's say I buy this, it breaks out, sets up another leg, and I want to buy on the next leg up, right? Let's say I'm going to buy this breakout right here. Well, a normal stop on theta, right? If I have to give it to the bottom of this base, this is 5%. 6%, something like that. And so you got to give it much more room. The other topic I haven't really talked about is risk reward ratio, right? How much to the upside is the potential? This is a different topic altogether, but this helps you screen out the trades, because if it says, all right, I got to give it down to here to make sense. Otherwise, anything tighter is just too tight, might get stopped out by just normal volatility. So if I got to give it down to here, then on the upside, I want at least 2-to-1 ratio. And generally speaking, I want to see a little bit more, right? 2.5, 3-to-1 at least. But if I do 2-to-1, that's about right there, right? And so when you do that, that kind of tells you, should I take this trade, right? If I'm looking at another chart, let's say over here, and the upside is only halfway and the downside is way too wide, then either you got to wait on it, look for a better entry point, or you just pass on the trade because the risk reward ratio is not in your favor. So just something to keep in mind. I always look for 2-to-1, right? If it was like this, like 1-to-1 or something, and the upside potential was only here because of resistance or something, I would just pass, right? So that's where the size of your stop is very important, because a better entry means a tighter stop. It means I can take a bigger position, and suddenly your trade is much nicer. Now you go to a 3-to-1 trade or a 4-to-1 trade, right? And that's really where entry points and all that stuff really gets important, which is why I'm always harping on, don't chase those big green candles, because it's really difficult to put a stop loss when you're chasing a big green candle, because it could just pull back, be a normal pullback, and then get going. And at that point, like, how much are you willing to tolerate on the retracements in case you're wrong? At what point are you going to bail out, pull the chute, and say, I was wrong, and just take your lumps, right? And so just something to make note of there. So position size absolutely will be impacted by how wide your stop is. Here's a simple formula if you want to do it yourself. Basically, risk max per trade. So if this is a dollar amount or a percent amount, you can do that. So using the $10,000 account example, let's say I'm risking a 1.5% per trade, then that means $150. Then you divide that by your trade stop loss percent, right? And so if my percent is 5%, then you basically just do the math. $150 divided by 5%. The most I can put in that trade is $3,000. $3,000 of my $10,000, which means if I get stopped out, the most I will lose is that $150, right? And that's where the power behind consistent trade management comes in, right? Because at this point, now you have a strategy, and now you have a way to do the math. And so, newer traders, their accounts will go like this, right? Their equity look like this, right? They're making a ton, yes, and they lose it all, bang, and then they're making a ton, and then they get smacked down. And the reason is they're going all in, all out, or they're going way too heavy. And if you want, the goal is to have an equity curve that looks like this, right? This is the goal. You're going to have pullbacks along the way. That's normal, but just generally speaking, you're moving in the right direction. You're making steady gains. The only way to do that is if you're consistent in your trading approach, because then you'll know, okay, I did that one wrong, I did this one right, fix this, fix that. But if you're risking a different amount every time, on this trade, if I get stopped out, I'm going to be down $100. On the next trade, if I get stopped out, I'm going to be down $500. On the next trade, if I get stopped out, I'm only down $20, right? Then it's very inconsistent. And at that point, it's very difficult to drive towards that, that steadily rising equity curve, which every trader aspires to, right? That's what you want, that consistent growth over the long term. And position sizing, risk management is all the kind of the key to all that. All right, so I put together a little Excel spreadsheet that has me, that helps me to do this position sizing real time. A lot of times you got to jump on a trade quickly. You can't do the math, figure it all out. And so what you do is you look at the columns here in the risk portfolio, the orange box. It basically tells you, okay, how much am I risking per trade? Generally, like I said, I will operate out of this 1% column or the 1.5% column on my risk, swing trading on crypto. And so what that means is, let's say I'm going to stick to the 1.5% column, this middle one right here, $150 per trade for every 10K. Then what that means is over here on the left, how wide is my stop loss? Let's say I have a 3% stop loss, then that means I can put in 5K. If I have a 1.5% stop loss, then I can do the whole 10K. Obviously less than that, you can go higher. If I have a 2.5, you do 6K, right? If I'm risking 2.5 per trade, then it just changes the number. So very easy. And if you want a link to this, I put together this file. It's part of the trading journal file that I put together. It's in the video notes. So if you want access to this, you can feel free to modify it. I actually have two versions of this position size calculator. I have one that is a BTC position size calculator. So if I'm trading Bitcoin to alts, I know how much BTC worth of alts to buy. And then I have the dollar-based one so that if I'm trading dollars, I know how much dollar position size to take. It's very simple. It's already done for you. All you have to do is change this yellow box to plug in the size of your accounts. And then from there, all these numbers will change automatically. And then you decide which column am I going to operate out of, and it's done. So go check that out if you want access to that. So that's free. It's in the video notes here. The other thing to mention on risk management, okay, we talked position size. Obviously, you have to know where your stop is. You always have to have a stop loss level when you're trading. Always, 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 always have a stop. If you don't know that already, write it down. Always, always, always have a stop. All right. Once you know your stop, you can calculate your position size, your risk reward ratio, all that good stuff. Beyond that, the trade management side, the drawdowns, part of the process of trading. No one, except for all the people on crypto, Twitter, and YouTube, no one is going to be right 100% of the time. There will be times where you get stopped out. There will be times where you're wrong. It's the nature of trading. Don't take it personal. But you have to have some sort of circuit breaker in place. You have to have some sort of total risk exposure, a cutoff point that says, okay, I've taken too many cuts. I'm going to take a break. I'm going to pause. I'm going to review. I'm going to lower my trading size very small just to get back on a rhythm, right? Because what you're trying to do ultimately is prevent the cycle of doom. You're trying to prevent the revenge trading. You know, trading is very psychological. And what happens is, you know, you have a trade and you get stopped out. Okay, no big deal. You have another trade, you get stopped out. Okay, now it's starting to get annoying. You have two more trades, both of those get stopped out. Now you're very frustrated. You're angry. And now you're thinking, screw you, market. I'm going to make all that money back in a single trade. And you start pressing, and suddenly position size goes out the window, and you're taking on double the amount, and you're pulling in 10x leverage, and you're saying, I just need one little wiggle so that my account can get back to where I started. And what happens is you enter the cycle of doom. And very rarely does that work, because you're operating out of anger, you're operating out of fear, you're operating out of frustration, and your head's not clear. Maybe the market's telling you, hey, it ain't ready. The strategy that you're using is not working in this scenario, and you're just doing it wrong, and the market's trying to tell you something. But instead, you press, and what happens? You go down from 5-6%, now you're down 10-20%. And so you got to have some sort of circuit breaker, some sort of cutoff point. For me, the way I do that is I have a total max loss for the week and for the month. Meaning, if I take a couple of trades in the week and just everything sucks and I'm off, or the market's off, or whatever, and I hit my max stop loss for the week, I'm done. I take a few days off, I take a few trades off, you know, and of course, there's going to always be something that's tempting. You're going to see a trade set up. You're going to go, oh man, that one really looks good. Then you have to have the discipline to say, you know what, I'm going to pass. Like, I'm going to discipline myself and wait, because the last 5 or 6 didn't work. I'm doing something wrong. So stop trading, right? And learn instead. And so that's really hard to do, especially as a trader, because you're individual. No, there's nobody telling you what to do. It's your money, your account. All you got to do is push a button and hit the buy or the sell. Very easy to do. It's very difficult to take a break, to close down the screens, to walk away from the trade station and just say, okay, I got to go clear my head. And that happens to me, you know, even in the stock side. You know, I'll be off a couple of days. Stock market's, you know, eating my lunch. I get stopped out. I get frustrated. And it's so tempting to see that next trade and say, you know what? I'm just going to buy 10,000 shares of that. Screw that. I just got to move up, you know, 20 or 30 cents and I make my money back. Like, it's very tempting, but you have to know when to stop and just like shut the machine down and walk away. Now, the nice thing for me on the trading on the stock side of things is my broker, I've actually sent them a max stop loss for the day. And so I physically could not enter in another order even if I wanted to. The system would literally tell me, done, you're done for the day, which is nice. Obviously in crypto, we can't do that. So gotta be careful. So have a circuit amount, have a personal max stop, and it's going to depend maybe 5 losses in a row or a certain dollar amount or a certain percentage. Just come up with a rule that says I'm out, I'm done, I'm going to take 3 days off or 5 days off or whatever it is. So you gotta have that. You gotta manage drawdowns, because what it tends to happen is you'll turn one of these accounts that are doing this into blam, blam, because you're not managing your drawdowns, right? And that tends to happen when the market is making a transition, and suddenly you keep getting stopped out and you're frustrated. Why do I keep getting stopped out? The market is going through a transition and you won't see that until later. But in the meantime, you're going to get chopped up and you're going to be very frustrated, right? Just like we saw here. Here was a good time to go long, right? You buy, you go with the trend. Yeah, you might get stopped out here. You go long again. Maybe you get stopped out here, but you go long again. But then up here, things really start to change. Suddenly going long is not so, so easy. You're getting wicked out. You're getting stopped out. The market's telling you something, right? It's telling you, hey, there's a change happening. And so you got to be very careful with that. You got to start reducing risk exposure. Instead of your normal position size, let's say you normally risk $200 per trade, maybe you just risk $100 per trade until you have a few winners in a row, and then you kind of, okay, I'm back in the swing of things, right? Same thing here. The market has been a great time to go short, good time to go short, good time to go short. Now over here, the last 3 or 4 days have just been brutal. I mean, let's dial it in a little bit, right? And I see some guys on YouTube and they trade the 5-minute charts, and and to me, that's just too much pain on Bitcoin. Unless you're using a lot of leverage, you're gonna hit the BARTs, or you're gonna get the big spikes. You're gonna chase it. It's gonna do nothing. You're gonna get stopped out. It's gonna rally. You're gonna get back in. You're gonna get stopped out. Very painful, right? The big wicks, they'll get you. So the last few days have been brutal. And if you're getting chopped up, then it's always best to just kind of zoom out, look at the daily chart, take the big picture, and then just say, okay, I'm not gonna trade. I'm not gonna do anything until we break out of this box, or we break out of this box, and then I'm gonna go back in, whether that's long or short. Or if I'm doing alts, I'm gonna just wait. That's why I always harp about, don't FOMO. It's really easy to. I mean, I'm human. I do that too, right? But it's really easy to FOMO. But if you can just zoom out and say, hey, you know what? I don't need to catch the exact bottom or the exact top. I'm gonna wait for this range to resolve and to get out of the way, and then I'll go with whatever the direction of the trend is at that point. So. And you're refreshed and you're kind of ready to rock, right? But if you're trying to trade all the chop, by the time the trend kicks in, your account value has taken a good hit. You're exhausted. You don't want to look at charts anymore, and then you end up missing the next big move, right? And so, have a circuit breaker is all I'm trying to say. I think that's really it. This topic, obviously, it's much more in depth. You can really talk about risk management from a number of different angles. Let me talk about managing the trade real quick, and then we'll get into some chart reviews. All right, so I mentioned this risk tool that I use. It's in TradingView. Here, let me hide the price action here real quick. Nope, wrong button. Let me hide the price, and then we can, there we go. Then we can look at this here. And I'm going to color this a little nicer for you guys that are not on the live stream. Here we go. Hopefully that shows up a lot easier, right? So when you click on the risk management tool, and there's one for long and there's one for short, so you can go short if if you trade on the short side, right? It shows the red on the top and the green on the bottom. But I'm just going to stick to the long end for now. And so the risk management tool is very important because it tells you a couple of things. One, it tells you your risk reward ratio, meaning how far down is your risk versus how far up is your potential targets. And then it'll give you a percentage, and it'll give you dollar amounts and all that stuff, which you can use to calculate trade size and all that good stuff. For me, my minimum that I generally like to go for is 2 to 1. So if I'm looking at a trade, I want to see the potential of 2% upside for the risk of taking a 1% downside on the trade. So if you're talking, Bitcoin's going up to 9,400, you want to see, twice as big on the upside as the potential stop loss value. So that's 2 to 1. If you can get 3 to 1, even better, right? And your target doesn't have to be higher to get 3 to 1. Sometimes it's a matter of, let's say here's the stop loss points. Sometimes it's a matter of where do you get in? If you get in here, it's 2 to 1. However, if you get in down here, keep the same stop, suddenly it's a 3 to 1, right? And so that's the magic of getting a better entry, it'll give you a much better risk reward ratio. So now that we have risk reward ratio, the way that I do it, I will generally do a couple of things, right? Depending on the trade and the setup and all that good stuff, but just generally speaking, what I like to do is this. I like to have my entry, and when I'm at either 1R or 1.5R, so either between here or here, I'll take some off the table, right? So let's say I buy in right here and the price goes up to here, I'll take some off right here. And if price continues higher, great. If not, if it pulls back, then when I'm at 1R, what happens is I've reduced my position size. So if it just totally collapses on me, the downside risk is minimal. If I don't take any at 1R, what I'll do instead is at 2R, I'll move my stop up to break even, right? So at that point, the risk in the trade is zero. You could certainly give back paper profits, but the actual risk, the downside to the account at that point is zero. You know, I've minimized the risk to nothing. But I generally will do option one. I like to take some off the table, book a little gains, tighten the stop a little bit, and then let the rest run, right? And then just kind of scale out on the way up, because inevitably you'll get those retracements. So you can scale out on the way up. So if I, sorry, I'm trying to use my tool here. If I take off a third here and it pulls back, I may decide to add back in, but still keep a tighter stop, and then just kind of cash flow the position that way. So you always kind of have a little bit of a core position, but you're scaling out along the way into strength, betting on a little bit of a retracement along the way. And what that does is that just kind of magnifies the upside potential. So by scaling in and out, instead of it being a plus 20% trade or something, now it could be a little bit higher, with still using the same target, just because you're kind of cash flowing the position. So that's what this is talking about, managing the trade, right? At 1R, I'll take some off. At 2R, I'll tighten the stop to break even, then I'll let it run from there, and then I'll just wait for a sell signal, whether that's a break below a moving average or a big bearish engulfing candle or something like that. There's a number of different sell signals you can use. All right, so let me see here. I've rambled for a good half hour at least, so I'm thinking that's it on the risk management discussion. I don't have any questions that I can see here. Let me see, and then we'll start looking at the charts. Gonna read through the comments here. So how do we calculate size using 5x leverage? That's a really good question. So with leverage, you got to remember that you can't use percentage on the downside. You have to use the actual ticks, right? So let's say you're buying here, and let's say this was your stop normally, right? 2.5%. Well, obviously with leverage, that's going to be different because you're magnifying it. So you want to look at the actual tick value or the dollar value, Satoshi value, however you want to look at it. But in this case, it's Bitcoin, right? So you have to look at the dollar amount, meaning if my stop, my 2.5% stop translates into $267, then on 5x leverage, that's actually over $1,000 to the downside. That's $1,200, right? Because it's 5 times that dollar amount to the downside, because you're magnifying the move. And so then you do the math with that bigger amount. So you say, okay, if the downside is $1,000 on this, if I get stopped out, how much of that 1,000 am I willing to risk? Well, 100. So then you got to put 1/10 of the position size in, right? And so that'll help you kind of calculate your leverage. You can't just go straight off the percentage, but on the upside, leverage obviously helps you. If the price goes up $1,000, you're going to do 5x that, right? So it's a little bit challenging with the leverage, because you have to do a little bit extra math, and liquidation value and all that stuff. Let me see here. Good advice. Take a few days off. Yeah, it's been a tough market, guys. And there's another thing, with trading, it's very psychological. Psychology is huge. There's something called psychological capital, and really all that means is there's only so much capacity that we have emotionally before we hit one extreme or the other, right? And you have to manage that psychological capital. If you're getting frustrated, getting stopped out, your psych cap gets depleted. And so what that generally means is you need to take some time off. You need to kind of step away from the screens, clear your head, think about something else, go to the gym, go for a hike, go play a video game, something. Just get away, let your mind recharge from a trading perspective, and then even a day off or a few days off, you'd be surprised at just how less emotional you are, and then how much more clearly you can think, and then you come back at the markets very fresh. It's also much easier to look at the charts and to make decisions when you're not in a position, right? If you're long Bitcoin right now, obviously you have a bullish bias and you're going to be looking at this and thinking only bullish scenarios. If you're short Bitcoin right now, you're going to be looking at the chart saying, oh yeah, this is a bear flag. It's about to pull back and we're about to, and so if you're flat and you don't really care, then you can think a little clearly, right? You can say, okay, what's really happening here? What are the moving averages telling me? What are the the volume profiles looking like, and so forth, right? So there's a lot more ways to do it when you're flat. You're not biased. You don't have a bet in any one direction, right? You don't have a horse in the race, if you will. So just some advice there. Let's see here. I'm thinking that's it. So we're going to look at some charts now. I hope you guys enjoyed that discussion. It's not always the sexy stuff. Everybody wants to talk indicators. Everybody wants to talk trading strategies and buy signals and where do I get in and all that. But if you can't manage the trade, if you can't do the position size correctly, if you don't use stop losses, I promise you all of that stuff will not matter. You will not survive in the long run. You got to have all these pieces in place as well. Psychology, risk management, all that stuff, very important. And trading is no walk in the park, okay? I'm not going to be the guy that tells you trading is super easy. Anyone can do it. Anyone can learn to read the charts. I love teaching people how to do technical analysis and read the charts. Actual trade execution, that's a whole nother ball game. Whole nother ball game. So you got money on the line. Things change. All right. Okay, let's see here. I think I covered all my topics. One more topic on risk management, and then we're done. Total risk exposure. I didn't really talk about that, but going back to the position size here. Where's the calculator at? Where is it here? Here we go. So if you're only risking $100 per trade, you also have to consider your total risk exposure. So if you have 5 open trades at the same time and all of them get stopped out, are you willing to live with that, right? If that's too much, then your risk exposure is too high. So that's just another thing to consider. And in crypto, because everything is so highly correlated, it's a very important topic. Because if I'm long IOTA and I'm long ETH and I'm long Litecoin and I'm long NEO, sure, all of them can have, I'm only risking 1% per trade, but there's a good chance that if Bitcoin dumps, they're all going to get stopped out, right? So how much are you risking? What's your total risk exposure? So you have to keep an eye on that. And that'll change, right? Because, one trade may be in the money. I can just move my stop to break even. So I have 0 risk exposure there, but my other trade, still maybe, a wider stop, all that good stuff. So one more thing to keep an eye on. Okay, I think I'm done with the risk management discussion. Let's go take a look at some of the other stuff here. All right, so let's talk BTC here real quick. So big picture first. Just, from a purely technical perspective, it's still in a technical downtrend, right? Price is below the 10 EMA. At this point, the 10 EMA crossed below the 22 EMA, and now price is trading below the 50 EMA. And so, the good part is all the moving averages are just right here. So price doesn't have to move that much to get back above it. But technically speaking, you're making a lower low, a lower high. We're not sure yet if this is going to be a lower low or if this is going to be a higher low. Has the potential to be a bounce. It feels like a bounce near term, but the big picture, it's still downward. The path of least resistance is still downward. we're still maybe playing out this double top scenario, which has a downside target of around 8,800. So just something to make note of, right? The macro picture is flashing the caution sign right now. It's not a all systems go, buy long. We're not there yet. This could potentially be a change, however, because looking at the near-term price action, let's go to the 4-hour view, right? The low that we saw last week, followed by that bullish engulfing candle, right? That was right here. So that was the higher daily low. We had this nice volume. It popped. You had this flush and then a massive spike on good volume. Nice bullish engulfing candle. We've still not breached the low of that wick. And so until it remains, as long as it remains above that wick low, then that is still in play, and a higher low scenario could still be playing out, right? We could still be seeing this higher low being set. We need to see price get over 10,200 to get some confirmation of that, right? And you're starting to see a potential double bottom form on the 4-hour view. Getting over 10,200 will do a couple of things. It'll get it back over some 4-hour resistance levels on the moving averages. It'll get it back over some price resistance here, likely trigger some short squeezes, some stops being triggered, some buyers coming in. So that's a good level to be watching, but it has to hold, right? Too often we've seen these big spikes, wicks, and then they drop. Obviously, that's a failed breakout. That's a bull trap. If you see that, that means get out of the way, generally speaking. So if you see a big break over 10.2 and then it just falls right back below 10, that's a very negative sign. So right now, you're kind of in no man's land. You're in the middle of a symmetrical pattern that's really starting to tighten up here. You've got higher lows, higher highs, or lower highs, right? Things are starting to coil up. It could go either way, right? I'm not going to pretend to say I know exactly which way it's going to go. Like I said, the daily chart has a bearish bias to it. The 4-hour chart looks a little bit more positive, right? This could potentially be a turning point, a little bit of a reversal. And as long as price stays above 9,500, it's in play, right? So you kind of look at both scenarios. For me, I'm leaning bullish in the near term. I'm thinking we could see a little bit more bounce action. So I'm leaning bullish, but beyond just some bounce action, I'm not so sure that the broader downtrend is done yet, right? The daily chart hasn't turned yet. So big picture view, can't say the pullback is over yet. Nowhere near that. Near term, we could see a little bit of bounce going into the weekend. So that's what I'm watching. That being said, I'm favoring the alts more than Bitcoin at this point. Looking at something like ETH, it's been in this huge pullback for quite some time. It's been little retracements along the way, but nothing that has stuck. And we're finally seeing another attempt at potentially a low being formed right here. And then here in the most recent hours, right? This is the 4-hour view. You saw a nice rally up to that resistance, and it's pausing right below this resistance. It looks like it wants to break out. So ETH BTC is looking good. If Bitcoin pops and makes that double bottom, I'm going to see how these BTC pairs hold up. Do we get that typical Bitcoin rallies, alts get smashed again, or do they start outperforming on the way up? And so that's what I'm going to be paying attention to. I'm looking for some outperformance on the way up, meaning if Bitcoin shows some bullish action, I'm looking at the alts to do better than Bitcoin this time for a change. So we'll see if that happens. So ETH, definitely on the radar. XRP, again, has been setting up a little bit of a breakout scenario here, popped above the line just a little bit ago. It looks like it wants to get going here. XRP, USD, also pushing over some resistance here. And watching this scenario play out here, I would use the 4-hour candle low as my stop if I went long here. First target would be this resistance. That doesn't quite put you at 2R, but then above that, next resistance is here, puts you over that 2R multiple. And so that's what I'm going to be looking for on XRP. The fact that it looks like a potential breakout on the BTC pair would mean if Bitcoin rallies and this one breaks out, then you'll get some good outperformance on the USD side. So looking for some XRP there. EOS has been one of the better names as of late. Had a nice move, was it 2 days ago, on the BTC pair, broke out. EOS USD also pushing over some resistance here and putting in a little bit of a pause consolidation right over that breakout point. The breakout point that I was watching was basically that 440 level. And I scaled into some trades there. 428 was kind of my first buy, 440, and then I scaled out here and was just watching this chop. So I do have a position still on EOS. My position is from the USD side, so I'm going to see how it does. If it can't break over that 470 level pretty soon, I may just cut it loose, but kind of watch it. Right now, it's just consolidating. Volume's drying up, so it's going to move out one way or the other. Litecoin. Looking at the Litecoin, again, very symmetrical. We can see how this is tightening up. You've got this low and then another low here, high, and things are just starting to get really tight. So a lot of alts are looking this way. They're just sitting really tight, getting very symmetrical. Could break out either way. On the 4-hour charts, I've got a little bit more of a bullish bias on them. So we'll see how that plays out today here. But they're not going to sit this tight for much longer. I expect by the end of the weekend, these will have resolved one way or the other. So we'll see. But I'm looking, some of these are looking good from that perspective. If you look at BTC pairs on Litecoin, also looking pretty nice, setting up, had that big volume spike, pulled right back to the moving averages, and so far it's holding up, right? Now, of course, you have a clear level of support. If it breaks that or that, then it's done. But right now, it looks like it wants to keep going up. So Litecoin's on the radar. Cardano broke out versus Bitcoin. Well, I say breakout loosely, right? I mean, it has a low. It's put in a little bit of a low. It's broken out above some very near-term resistance, right? It's not like it's breaking out to a new high or breaking out on a, on an ascending triangle base. It's a little bit different, right? It's breaking out about some near-term resistance, but it is looking good. Things are positive from that perspective. The daily chart, has work to do still. There's a lot of work to do. This is just a pause in what has been a brutal downtrend for Cardano. We had this bigger bounce here, pullback, and it's, for the last couple of weeks has been sitting tight, maybe finding some support. So, that's why I'm saying near term. I'm looking a little bit more for the alts in the short run, right? Are they done versus Bitcoin going down long term? Who knows? It's way too early to tell. But even if this is just a retracement bounce, I mean, you can get some pretty decent bounces and trades out of that. So that's what I'm looking for. Bitcoin Cash has also been rallying versus Bitcoin here, edging out above some resistance here near term. This one's a little bit tougher. It tends to be a little bit more erratic, in my opinion, but that's definitely moving in the right direction. Neo BTC looks like it's trying to break out, setting up here. It's been range bound, had a very strong move off the lows. Last weekend, we saw a 40% move in Neo, pulling back, trying to bounce. Can it go, or is that it, right? If this forms a lower high, then that's probably it, but I'm looking for a breakout, a push higher. Ontology has been very strong relative to Bitcoin. Obviously, USD side not quite as strong because Bitcoin's just choppy, but on BTC trending higher here, looking pretty good. I'd wait for a pullback on something like this just because it's already feeling a little bit extended near term. And then if you go in small cap land, there's been a lot of names that have been strong. Nano has been on the radar. Let's see, ARK. We looked at ARK during the last live stream. That's been strong, maybe a little toppy now. Theta has been strong. So there's been a lot of small cap names that have just been, just charging forward here on the way up versus BTC. Let's go look at this real quick here. What's on the list? So there's a question. Every time I try to play an alt play, BTC dumps. Yeah, it makes it very difficult to manage alt BTC pairs because the correlation is just so high. And you're right. If Bitcoin decides another leg down, doesn't matter how nice the alt setup looks, generally speaking, it's going to get hit versus, on both sides, BTC and dollar side. Let's see what we got here. Zencash, Aeon, WanChain, QKC, Cardano, Engine. So there's been quite a few smaller cap names here kind of popping onto the radar. ENJ, WanChain, huh? That was a name from yesteryear. WAN chain has been strong. What were some of the other ones? Oh yeah, Zencash, QKC. Let's go look at Zen. Nice. QKC. Showing a little bit of strength here. Dash was on their list the other day. How's it looking? Still marching, still charging out versus Bitcoin. So not too bad there. I posted some names for the subscribers here yesterday. Litecoin Dash, OMG, on. So we already looked at most of these here. IOTA. Let's go look at OMG real quick. OMG still looking pretty good. Maybe a secondary entry point setting up right here, kind of just sitting tight as the moving averages catch up on that 4-hour view. Volume's drying up. We'll see if it can break out. It is right at resistance here. And that's also where there was a little bit of a wick right there. So it's a pop over. Let's see here. Nexo. Oh, yeah, very nice. Very nice move. What percentage is that here? It's about a 30%er. Solid. BSV, I haven't looked at this guy in a long time. Well, maybe not that long. Apparently I have some arrows drawn on it. Let me zoom out here. Let's go to the daily chart. Interesting little bounce. It feels like a dead cat bounce. It was just so crazy oversold, and it's bouncing right into the 50. If it pauses here and pushes over that, then I'd look at that. Oh, nice. You got some Beyond, huh? Beyond was beautiful this week. It's been crazy since it debuted, though. It's been amazing at how high it has rallied the market cap on Beyond. Just IPO just pretty much went straight up. It went parabolic, looked like it was done, and then here in July just keeps going, man. It's crazy overvalued, but hey, people are still buying it. Shorts are getting squeezed to heck. All right. What was some of the other names here? Looking at I think we covered most of them. IOTA. It's a breakout watch for me. I'm not going to do anything until we can actually see it clear some resistance, but it's sitting in a similar pattern to like how Cardano was and some in ETH, right? They're putting in this little bit of a low kind of consolidation. Doesn't mean that's the low, but at least the bleeding has paused for now. All right. What else? Thinking that's it for now, ladies and gentlemen. I'm going on about an hour here, so we'll go ahead and call that. Let's see. Stellar Lumens on the move. BAT. Let's go take a look. Oh, BNB. Let's take a look at that one too. XLM, huh? Stellar on the move. Yep. Seeing a pretty good little attempt here. 4-hour view, trying to bust through a little near-term resistance right there. I'd be watching this one. Kind of running in sympathy with XRP. Okay, BAT. Nice. Look at that volume on that last 4-hour candle. Good. Right when it clears this resistance there. See if it sticks. Only got about 30 minutes left in that 4-hour candle, so most likely we'll finish looking good. BAT. Gonna have to put that on the watch list. 0x. 0x. Yeah, it's testing some resistance here again. Just like a lot of these, they're primed for some breakouts versus Bitcoin. Which ones will break out and follow through is anyone's guess. But yeah, this is a candidate to watch here too. Just it had support here, and you can see these wicks back here where it's tried, failed, right back at it. So see if we can get a pop through here on the way up. If it does, then you're looking at your next level up here as your first target. What do you think about Ren? Let's see here. Double bottom, maybe? Wow, this one's been running nicely since the 17th. Oh, nah, it's only up 115%. It's not that good. Yeah, all-time highs on this one here. Well, since the debut, so nice. So the question was, it appears to be a double bottom. Yeah, you can call it that. I mean, it was more like a pullback or a throwback to the breakout, right? Double bottoms are when they're reversal, but you could call it that, right? So what happened here is it had this very strong breakout higher, and then it just fully retraced, but it held the breakout point, rallied, held the breakout point again. Second time, once it starts to move off of that level, that's a good place to start looking at it, and obviously it worked. Nice. Zcash. Let's go take a look at the Zcash here. You know, it was showing some life the other day. It did hit the alert system. Was popping off the lows here, but just fizzled out. It's still holding the support level here. Some volume's coming in. We'll see if it can break out above this little near-term resistance. But this looks like up here looks like a pretty big wall above that 8,000 Satoshi level. So that's really the first level I'd be watching. You know, it could be a good swing up to that point. And let's see, from a trading perspective, looking at what we just learned, if you did a target here, and let's say my stop loss was this swing low, that puts you at around 2.28 multiple. So for me, that'd be an acceptable risk reward multiple. I'd be willing to take that trade. You know, it's only 8% upside, 3% downside risk at that point. Okay, let's see here. Ubic, and that's a name from yesteryear. Is it dead? You know, I haven't followed this project in a long time. The chart's certainly dead. It's pretty much back to all-time lows. I mean, look at that, back to the February 2017 levels. Holy moly. But I have no clue on the project. I mean, I used to follow it when they first kind of debuted. It's going to be the next Ethereum. Remember, everything was going to be the next Ethereum? But I don't know. Not sure what's going on with Ubic these days. All right. Reading. Not on Bitfinex here. Hold on. Let's go to Binance. There we go. Look at this. I was watching this descending triangle here. It looks like it broke lower from that. ETH is the next ETH. Could be. Probably is. All right. Yeah, it looks like this one broke bearish here. Just probably nothing to do until it can reclaim at least some near-term levels here. So you can see here it just dropped, finally found a low. Looked like maybe it was going to get going. Never was able to break out of this resistance up here. Rolled over, finally broke some support. Getting back over this level here would help change that and maybe establish this as like a little bit of a washout. The volumes are just really low on this guy, just really easy to move. Really tough to trade those. Oh, no, I didn't do Link. Let's do Link real quick because that one has been an interesting setup here. Been watching this one here. It's still holding above this breakout point. Technically, it's in a little bit of a descending triangle, so you got to be cautious there. But, you know, macro speaking, it's been one of the more resilient names here in the last few months, even as many alts were just getting hammered. This one just continued to rally. Obviously has been in a little bit of a pause, pullback mode since July, but it's still holding support. So I'm definitely watching this one. I'm not going to preempt it. I'm not going to anticipate anything because this support, you know, it's vulnerable here. Price is really starting to tighten up. So it could go either way. What I'd like to see is a strong volume pop here, maybe a little bit of a pause, and then a get-go there. So watching this one here. Yeah, and that's another thing, right? If you sold all at the highs, you know, and you did a really good exit on that, there's nothing wrong with picking some up on the dip, because you're coming in from a different position, right? You've already booked some gains on that, and so you're coming in from a little bit more of a position of strength. But same thing on the dollar side. Me personally, I want to see it take out this trend line first, and then at that point, I'll start looking at it as, what are the different ways to hop on. But it's still trending lower. All right. I think that's it for now, guys. Thanks for being here. Thanks for watching the first half, for those of you that caught that. And I hope you guys all have a good weekend. We'll see what these wild roller coaster markets do here. ETH is the next Doge. We'll look at Bitcoin one last time, and then we will wrap it up here. And of course, as always, go to nodeinsiders.com, nodeinvestor.com to get more information, to get access to those courses. If you have any questions about the course, shoot me a DM on Twitter. It's probably the best way to do that. So yeah, looking at BTC here, just to kind of recap on some of the levels to watch in the near term. 9,500 on the downside. If it breaks below that, not looking good. I don't think this low would hold. There's still the possibility of, hey, this is a shakeout to the low and then it goes. But I would be more cautious if it breaks. On the way up, 10.2 is really a key number. If it can hold above 10.2, things start to look a lot more positive at that point. And so that's the way to go. All right, my friends. We will see you all in the next one. Until next time, take care, everyone.